Hello viewers and welcome to TheStopHunter. Now my brain never stops whirling around and I was sitting at home thinking about Renko. The sun was out and my mind drifted to the seaside and the waves lapping against the shore, and that then got me thinking, Elliott Wave, a bad link in, but it got my brain thinking anyway. What about Renko and Elliott Wave together? Could you put the two together to come up with a new strategy? Well, I went away, did a bit of research, and obviously Elliott Wave relies on time, but then I was thinking, well, actually a lot of my Renko strategies now do involve time, so maybe it would work, and I've put together a new strategy for you guys that you can explore and make your own. We're going to have a little look into the background of Elliott Wave for those who don't know about it. Then I'm going to take you into the detail of the strategy, what markets look good on it, how you can get in, get out, all those rules that you need to know around this new Renko Elliott Wave strategy. So with that, let's get into it. So Elliott Wave Theory, that's really one of the granddaddies of technical analysis. It's been around forever, well used by technicians, but it's a simple form of technical analysis that suggests market prices move in repetitive patterns or waves. Now, coming from a quantitative background, you might argue against that, but I'm also a technical analyst trader, and it certainly does move in patterns and waves and can be easily proven, and that's driven by investor psychology. Now, according to the theory, these waves are part of a broader predictable cycle, and there are two main types of waves: the impulse wave, and these consist of 5 subwaves labeled 1 to 5 and move in the direction of the larger trend. And waves 1, 3 and 5 are motive, pushing the trend, while waves 2 and 4 are corrective, temporarily moving against it. Now, after 1 to 5, there's the series of corrective waves, which is the second type there, and these consist of 3 subwaves labelled A, B and C and move against the larger trend, and they correct the price movement of the previous impulse wave. Now, the theory posits that markets move in these wave patterns across all time frames from minutes to decades, and if you can understand the current wave position, it can help you predict future price movements. And the underlying principle is that collective investor behavior driven by emotions like fear and greed create these repeating patterns. Now, on the chart in front of you, I've just got gold on a 3-hour chart, basic candlesticks, and you can see I've applied the Elliott Wave indicator. I'm in trading view here. You just go up to indicators if you want it. You type in Elliott Wave. You'll see the main one there as a default in trading view. Apply that to your charts and you'll come across something like this. Now, going back to our waves, you can see the inputs there. We've got the blue line here, which is our main waves. We've got the motive and corrective. You can see them all labelled up, and under that we've got something called subwaves, which are these yellow orangey type lines. Also, we can use them, and we're going to use them in our strategy coming forwards, but we can basically see the 1, 2, 3, 4, 5, and then we've got this corrective phase over here on the right hand side that we talked about. Now, you're wondering what happens after that corrective wave. Well, it normally moves in the direction of the prior trend, and that's where sort of Elliott Wave becomes a bit more subjective. You've got to decide whether you think that's up or down and where it's going to go to next. Now, in this instance, we look for whether there's higher highs as we move through those different waves, which we can see there. So in gold here, we'd be expecting it to move on upwards. Now, Elliott Wave becomes a lot stronger if you use other indicators tools like Fibonacci, other indicators, which we are going to apply and use within this new Renko based strategy. So that's the background to Elliott Wave Theory. For those not too familiar with it or just wanted a refresher, there you go. Let's now get into the Renko strategy. So here's the full strategy setup. First of all, the Elliott Wave, you can see up there in the top left, that's the one we just talked about, exactly the same. Apply it to your Renko charts and you'll get the same structure. Now let's start down there at the bottom. We got the RSI. What have we got settings wise? Let's have a look. Quite fast, set to 7 length. And the key for this strategy is it as a trend filter. So it's that middle 50 line that you can see there on the chart. You know, above it, it's bullish trades. Below it is bearish trades. That's all we're using the RSI for. And you'll see the Supertrend indicator on there as well. What have we got there? Well, it's really there used for helping us on the timing of our entry and exit points. And the settings, ATR 10, multiplier there 3, and really that is pretty much it, other than what we will be using for sort of targets for profit taking or in stop losses as our Fibonacci retracement line over there on the left, and we will be drawing, showing you how to draw them on shortly, but that's going to give us, like I said, these price zones that are critical and complement the Elliott Wave Theory. So that's the components. Let's now get into how the strategy works. Now, block sizes and time frames, we haven't talked about those yet. Well, as you can see up the top there, I'm in a 1 minute time frame for the trading window here. I like to collect the granularity of the blocks because, as you can see down here, we've got this subwave pattern building. The bigger the blocks, it's going to take out more of that subwave noise. So there's a balance between getting the right block size in this strategy I found so far. This is Bitcoin. Like I said, we're using a 300 block size. Now, how have I come up with that? I'm using a 30-minute ATR to come out because I still want to get the trend. Like I said, it's that balance between getting the trend so we can get these nice big moves between the waves, but also I want to see these subwaves building as well. So I'm basically using like I said, a 30-minute ATR number for the block size and trading it on the 1 minute chart. So first of all, entry rules. We've initially got to decide around what impulse wave number zone we are in, and we're looking to identify the end of corrective waves 2 or 4. Now, entry confirmation, we then jump down to the RSI, look for whether it's greater or less than 50. Remember what I said, as you can see marked on there, above 50 it's bullish, below 50 it is bearish. So like I said, let's just quickly recap. We're looking for the 2s and the 4s, and we're then looking for the RSI to be above or below 50. And then what we're going to do is we're looking for that change in the Renko bricks. For bullish, we want it to be turning green, bearish, red, or whatever colours you're using. You get my gist though. And our super trend indicator, which you can see in there, for bullish trades, we want that turning green, and for bearish ones, the downside, we want it turning red. And once all those have lined up, we place our buy or sell order, like I said, once we've got that confirmation of alignment. So that was on an impulse wave entry, but we can go on the corrective wave entry as well, and we identify the end of the 5th wave impulse pattern, as we can see happening up there on our chart. And again, confirmation, it's the RSI, the Renko brick change, and the Supertrend must confirm the corrective trend. In my charts here, red for bearish and green for bullish. And then we look to place our buy or sell order again when all confirmations align. Notice on this chart we've also got those orange sub waves. You can apply the same process rules around the major impulse and corrective waves as you can to those sub waves if you want to get more involved, more strategies, more trading. So what about exit? You've got a few choices here, and the first one involves our introduction of Fibonacci and targets there. Now the Elliott Wave indicator on TradingView does give you targets based around Fibonacci extension, but you can also use the retracement indicator there to draw your targets on. We were talking about, we look for 1, 2, then we'll be capturing in this instance 3, or in the other instance from 4 to 5 would be our targets. Now, in terms of Fibonacci's, we're going to be looking for the highs and the lows, and I like to put them on between those key numbers or key highs and lows that you can see on the charts. Now in that example I've just gone between 1 and 2 waves, and it looks a bit crowded obviously, so we'll zoom in to show you more of the price action in detail. Let's get that up there. What are we actually looking for? Well, all our rules have aligned. We've gone in because the RSI is greater than 50. We're looking for that corrective wave. Yes, that's all ticked. We're looking for that 2 to 3 run up. Our super trend has turned green, so we're getting into the trade round about here, and this is where the options come in. We can target this key Fibonacci number here, the 1.618% line, and when it gets there we get out of the trade, so somewhere in this zone here. We can trail up stops if we want to do that, or alternatively you can follow up the super trend signal until that changes as well. So there's a lot of options in there in regards possible exits, and in the corrective wave which you can play around with, you can use maybe the 61.8% Fibonacci line there. Remember, we were also looking for the end of 4, so this is how I sort of scale up the trades according to the strength of the trend as well, because again with the Fibonacci I then start from the 1 and go to the 4, so you've got a bigger sort of range in there for those predictions on where we want to hit our targets. Let's just draw them on. So there's the 4 ending, and where's number 1? It started there, and again let's just zoom in. Let's just move that also to the side a little bit. Where's number 1? Over there. And again for this part, the 4th wave, I'm going to be focusing in on the 1618 again, or like we said, the super trend there, which trailed up very nicely in that wave. So you can start to see these are, I would say, slower trades where you're looking for a higher risk return. And in terms of stop loss, I would set the stop losses below the if it's the impulse wave, stop loss just below the start of wave 1 or previous swing low, and the corrective wave stop loss I would place just above the start of the corrective wave or previous swing high. And like I said, maybe introduce, you can play around with this, introduce your own trailing stop, to capture those, nice uptrends. That 4 to 5 there was a really nice uptrend, but you can see there's a lot of noise in there. So a trailing stop could be useful, or like I say, follow the super trends or use the Fibonacci's as the targets. So that's pretty much it. It's not too complicated. It's looking for the wave patterns to start with, and we're looking for like that 2 and the 4, and then we're going to try and pick up on that trend move and that trend move, or you can use the corrective waves around over here in a similar manner. Once we've defined those waves, we look at our RSI at the bottom, you know, for bullish, bearish confirmation, and also our super trend indicator to also be confirming the bias on what we got to the up or downside. And then we're using, to get out, the super trend indicator or the Fibonacci lines, or a trailing type stop approach to lock in the profits. And like I said, we're looking for a decent risk return stop loss wise. You know, we could be under those swing points in the price as our stop loss, and you can see if you can stay in the trade, it's a good risk return there. So that's the basics of the strategy. Let's go now into the backtest results that I've pulled back so far, as well as markets that it seems to work nicely in. Give you a few stats and detail around there. So what about backtest results, performance? Well, here we've got Bitcoin on the $300 block size. That's the one we've been concentrating in this video. Not bad numbers there. Did the backtest over a year, so you can argue whether that was long enough or not when I've got enough data. But remember, you've got to start somewhere. Got to do some more outsample testing, a bit more, you know, thoroughness before I'm fully satisfied with the strategy. But so far, looking pretty decent. Sharpe ratio just over 2, win percentage 72%, risk return 3.5 to 1. So probably if we're using Kelly's criterion for sizing, you could get something pretty decent in terms of size there. Number of trades, remember Bitcoin's a 365 day a year trading market, 150, so we're talking less than one every 2 days. Similar sort of numbers in other markets, but remember there's less trading days, about 260, so slightly more action in other markets. But generally overall, as a starter, pretty decent. The block size as well, remember, it's that fine balance between the major waves and the sub waves. Here I've gone for 300, but have a play around, try 200, 100, 500, see what you get. The bigger you go up, the less trades you're going to get, probably more reliability in the signals because of the Elliott Wave functionality. But you know, that's down to your trading style and approach. Here I've gone for a more conservative 300 that felt the right sort of number for Bitcoin. But what other markets did I test on that also worked well? So I put this table together of 10 other markets, including Bitcoin Cash, as you can see at the bottom into this table here, with the reason why they should work by those markets. Now I did test them and got, you know, results around the band of the Bitcoin sort of numbers. Maybe like the win percentage dropped to some in the sort of mid to lower 60%ers. Sharpe ratio looked consistent. Risk return maybe between 2.9 and 3.5 to 1. But as you can see here, we've got Nasdaq 100, S&P 500, gold, oil, euro, GBP against the US dollar, Apple, Amazon, Tesla as stock. So really we're looking for liquidity, volatility and trendiness as the factors in, you know, what market could work nicely for this type of strategy. So there you go, backtesting and performance results so far looking pretty good. So there you go, the Renko Wave strategy. Elliott Wave Theory plus Renko equals this whole new concept in the world of Renko trading. Probably not too many strategies like that out there. Let me know if you use Elliott Wave with the Renko charts. Get those comments coming in. Let me know how you use them. Love to hear what you're up to there. But why should this strategy work? Well, it's twofold. Elliott Wave, now we've introduced time to the Renko charts, should allow that theory to work. And secondly, I think most importantly, the Renko charts, unlike the candlestick charts, clear out the noise. So I think you're getting clearer Elliott Wave patterns on the charts, which make the analysis and execution of a lot easier. So I think the benefits of using Renko and Elliott, now we've sort of taken it the non-traditional route, introducing the time, really do create a unique strategy and hopefully a new trading edge. Now, we've seen the results so far in the back tests, all look pretty decent, but what I'm going to do, because I quite like this strategy and want to test it further, I'm going to go live with some live trading signals around those markets that we've seen performing quite well in the back test. So if you want to see those signals live in real time, then as part of our Traders Club we've got here on YouTube, I'll be posting them into that area so you can digest and see what actually happens. And if you want to find out more about the Traders Club, I'm going to put a video link at the end of this video that you can find out more and hopefully join up there. Got a lot for you there, and like I said, now includes signals, and not just the signals from this strategy, the other Renko strategies that I'm doing as well. So I think it's great value, and that video coming up in just a minute. But also, if you've liked the video today and you want to learn more about Renko, then I've got a playlist coming up for you also on the channel, about 40 videos I think now. Work your way from top to bottom and you'll come out the other side a Renko master. Now, hopefully you've liked this video. Please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to receive future notification of new content from the channel. And those two videos I mentioned, well, the playlist and the Traders Club video, coming up right now for you.